I'm joined by Simon Brazier. He's the co-head of UK equities at Threadneedle Asset Management. Simon, great to see you. Okay, well, it's detracting from the task, the monumental task that we face at the moment in the UK.
Well, there's no doubt the elephant in the room is the government deficit, sorting out the government finances, and the key that everyone's been talking about up to now is having a strong, stable government. Obviously, the recent events, a Lib Dem Labour Pact probably would not lead to a strong, stable government, and that is the worry I think the markets will look at going forward. Right,
we look at what is on prospect on the table from all the parties. It would seem that the Liberals and the Labour Party are close together. They don't want to start cutting the deficit straight away. They want to wait, whereas the Tories want to start straight away.
Yes.
So, how can you possibly have a Lib-Conservative pact, really?
Well, a Lib-Conservative pact would probably be on the assumption that there would be that the Conservatives would give away some stuff in terms of electoral reform, but probably give the Conservatives the mandate to get on with cutting the deficit that they've set out that was very key to their election manifesto.
Who's got the better ideas, in your view, in terms of cutting here? I mean, because we do have very different things. I think Sweden and Canada have got the ear of the Conservative Party.
If one looks back in history, the two countries that have cut their deficits without being forced to by the likes of the IMF have been Sweden and Canada. And the lessons that were learnt from both those fiscal consolidations that occurred were that you cut early, you cut hard, and you need to get the people behind you in terms of the mandate to do that. Now, the Tories probably have two of those things up their sleeve, which is they are prepared to cut early and they're prepared to cut hard. My concern would be, do they have the will of the people behind them to take the medicine that probably will be required to be taken?
How are equities going to likely to behave ahead of all this?
During this uncertainty, I think that we will continue to see volatility. I think actually the gilt market is probably where the ultimately will play out. In UK equities, where I'm involved, yes, we have a relatively large part of the market directly involved in UK domestic sectors, the banking sector, property, real estate, retailers, but actually, a well-rehearsed argument, a lot of the UK equity market is overseas, and trends that are going on globally are much more important.
Yeah, so stocks, generally, if we do go through a period where we're retrenching the public finances, do, some of the more exposed stocks to Britain themselves, or domestically exposed stocks, how do they perform?
Well, if we were to say get a Lib Dem Conservative minority government stroke coalition, we believe that retail stocks would continue to struggle under that scenario. We feel that taxes that the Conservatives would look to put up, VAT would be the first one, hit the consumption. I mean, again, going back to the Swedish and Canadian example, the OECD did a report after looking at both of those cases, and they came out and said that in terms of tax rises, taxing consumption and property was much better than taxing income and corporations.
Oh, why?
Taxing incomes and corporates actually distorts the economic system. It distorts the willingness of individuals to make decisions in terms of whether it's allocating their own pay or whether it's corporates in terms of allocating their capital. Taxing consumption is a way which is a short-term positive which can be taken back and doesn't distort that system.
We're talking about VAT principally, of course, but doesn't that affect the poor more so than the rich? Yes,
and I mean, again, using the Swedish-Canadian example, the Swedish used a balance of tax rises and welfare cuts. The biggest hit on the poor actually is welfare cuts. The Canadians took out a huge amount of cost in terms of welfare, and the inequality in Canada went up quite significantly.
Very quickly, what about some of the sectors that you favour and the ones that you don't, very quickly?
As I said, retailers we're still wary of, although valuations are starting to come down in that area. We still favour companies that have strong balance sheets. Refinancing risk is still a big issue we feel in the UK, the availability of capital. So companies with strong balance sheets in structural growth areas are exposed to overseas earnings.
Simon, thank you so much for joining us. Simon Brazier there from Threadneedle Asset Management.